Is everyone going to get mad at me if I sing it's the Friday song? Heck yeah. Holy mackerel. Did we see some major capitulation in the markets last night? Panic margin selling around 7:30. Triple D's eyes were like this wide open. Is it a bottom? Are we in? Is this the bottom that we've been looking for? We're just going to rally our way back to all-time highs because we're going to spend our way to all-time highs. 200 billion, 300 billion, who knows what's next? We'll cover Amazon in the red. We'll talk about what happened with Google with the price action that their big Capex spend. We'll talk about silver capitulation. We'll talk about some earnings reports from Roblox. We got two Kes today. Louis Sykes, homie charts, who's been nailing the crypto market. Maybe he could find a bottom for us. Special guest at 8:50 from TipRanks and the Fly at one of our great sponsors coming on, Julie Gillespie. No further ado, it's a Friday on PreMarket Price.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, I'm just going to give you the pre-market high at 68.70. We're 20 handles off that, up 30 handles on today, 100 handles off the low. The buck is flat at 97.71. TLT flat 87.46. USO just down 20 cents, trying to find support here at 76. GLD bouncing back from that shellacking yesterday, really bouncing back from the overnight lows. That's up $10, 452. SLV up $1.71, 2.5%, 68.45. And Bitcoin, we're looking for a relief rally. Look at that 200-day way up there. I need my binoculars to see that thing at 88,640. These charts are brought to you by TradeStation, Board and Trade Chart. Analyze, customize, all in one platform. Learn more about TradeStation and bring it on Triple D. Triple D, we missed you a little bit yesterday. Had a lot to cover, but dead can't bounce. We were going back. Dead can't bounce. Dazed and confused. Dead can't. And
on the title of the show. Yeah, I mean, you could do both. Like, both apply. This market is definitely dazed and confused all over the place, trying to figure out if it likes AI, if it doesn't like AI. But, you know, what we had was a classic dead cat bounce last night, and it was violent. So let's just take you through the action from last night. It started with Amazon earnings. Brentster, come on in here because you were involved in this here as well. Welcome to Brentster.
Good morning. Good morning. Good morning.
So right off the bat, Amazon reports. Everybody in the grandma was saying the same thing because I said, I think the report's going to be fine. I think it's going to sell off. It's just what stocks are doing right now. At the same time, I was saying it in the STN room. Another person came on CNBC about a minute later. It was an analyst and said, look, it's probably going down in the report because they're all going down in the report. So this was obvious guy trade that Amazon was likely to fall in the report. It indeed has fallen on the report. So quickly give us the Amazon numbers. Yep. It's the main one we're going to cover off the hop, and then we're going to this whole theme of what happened last night and why the market is up this morning.
Love it. Can't wait. Amazon with a mixed quarter and inline guidance. I don't think anything to write home about quarter-wise. They actually missed on the bottom line. They reported 195. Analysts were at 196. The sales did beat nicely, though, 213.4 billion. Analysts were at around 211.3 billion. The guidance was at the middle of the range. They're expecting Q1 sales 173.5 to 178.5. Analysts are around 175.5. For all of the bluster about these earnings, if you ask me, the earnings and guidance didn't matter at all that I just gave. It was only the Capex guidance. That's what it seemed like the street only cared about.
Yeah.
And the Capex guidance, they said that for 2026, they are going to spend $200 billion on infrastructure, on logistics, on investments, basically.
This is where the market is scared. The excessive AI spend. The market is scared of this. We saw Google tank on it. It did rally afterwards. But we've seen, you know, what's happened with Oracle has just been incredible here. The market is scared of excessive spend right now because it doesn't know if there's a payday at the end of it. It doesn't even know right now. The market has a love-hate with relationship with AI. So let's just take you back through the whole thing. I mean, last year, any stock mentioning AI, blast off Central, Anthropic, OpenAI, blast off. The market absolutely loved AI in 2025. This market does not like AI in 2026. The market has turned against it. So, and it turned against all those stocks, saying, well, the valuations have gotten too high. We don't know what industries are going to be, replaced potentially or obviously disrupted by AI. And it just doesn't know where it's going. So the market has gone full scared of AI in the last 2 and 3 weeks. What has gone into is value stocks. We've had this huge rally in value. We've had this huge rally in stocks that actually make a lot of money. We've had this huge rally in stocks that hold a lot of cash, like Berk.B. It's playing defense. Staples, drugs, and lower PE names have really caught on really strong here in 2026. So what we saw last night was like selling, Amazon comes out, and then Bitcoin starts going down, and then SLV starts going down, and then just every Momo name across the board starts getting absolutely hammered. I would say between 6 and 7 o'clock, there was just nonstop lows, just new lows, new lows, new lows. Bring up silver because this is really where I saw some capitulatory selling last night. SLV went from like 66, 65, 64, 63, 62, 61. I think how low did we get on SLV? Did it go? You have it circled.
It went under 60.
Went under 60.
58.51.
Like an hour. That, my friends, is called like margin call selling. That, my friends, is like people getting and they're like, I'm in trouble. I got a message from my broker. I've got to post more margin here. What do I do? Like I don't have more money, and we talked about levered up. Bitcoin was the same thing last night, hammering them. We saw capitulatory selling in SLV and I believe Bitcoin last night. We're going to have Louis Sykes on here, so we'll get his thoughts as well. But I mean, Bitcoin in itself here too. We just dropped like what 20,000 in like 4 days on Bitcoin, lose 25% in 4 days. These are big sell-offs. Now, if you're looking at the S&P, you're not seeing any of this because it's been cushioned by the low PE names. But in the Momo stuff, it has absolutely been ugly here. So now we get the bounce, the dead cat bounce, where all these stocks, they're dead, been dead, bounced significantly overnight. They come in, capitulatory selling last night. They came in about 7 o'clock, started buying Bitcoin. Then they started buying silver. Then they started buying. Now we come in and all these things are trading higher here this morning. So we come right to the question, is this a dead cat bounce and just another rip to sell? Or did we see capitulatory selling last night and those after hours lows where SLV got under 60 are going to hold? I'm going to ask the question. Nobody, stop right here. Nobody knows the answer to this question. Nobody.
Hey, Dennis, can I go back for a second?
Stop listening to them. They are stupid. Nobody knows. All we are as traders is taking the information that we have. So this could be a dead cat bounce that holds, or it could be another trap where you've got, the bounce happening, dead cat bounces, dead cat bounce no matter what. But does it hold or doesn't it hold? That is the question.
Okay, you got a lot of things in there, but I just wanted to go back with the Amazon and
Sure.
Before we do the price action and the move in the AI plays with the Amazon report versus the Google report. Because when they came out with that Google report, they couldn't get enough of Broadcom. They couldn't get enough of those stocks. And they had a big rally, and then they gave it back, and then it kind of rallied again. But Brent noticed some interesting price action off the Amazon Capex numbers.
Well, yeah, when we saw Google report, we saw Broadcom move right away and continue higher. We saw the data center names started running, CoreWeaves of the world. We saw some of the energy names like a CEG or a GEV start running. And then last night with Amazon, those got a pop, and then they were sold off and back like flat and selling off within like 5 minutes. And with Google, those gains were sustained for hours. So did we see in real time right before us the market becoming jaded to this Capex thing? I think so.
I mean,
so.
I don't think it was just last night. I think it's just now it's like it doesn't even, we can't even sustain a rally for 5 minutes off of it. This was a driver for all those companies before, and we can't even hold for 5 minutes. We're just seeing relentless sell the rip pressure here, which we're probably going to see today too. Folks, we're not going straight up here today. I highly doubt it. It's going to be backing and filling. The question is, can we hold the overnight lows on the S&P? Joel?
I mean, where did we get to on SPY? Low. This is like
SPY has been cushioned. Like SPY doesn't look bad.
This has to be one of the most important days in the market I can remember in a long time. Because if we cannot hold on to and I'm not talking ripping back up and taking out the high and everything, but if we roll over, I mean, and take out the pre-market.
Oh, real bad.
Then it's over. Then it's over.
Stocks are officially dead. Game over. Game set match.
It's over. It is. And I don't even want to talk about that thought, but I just want to go back because I know we got our guest coming up here. Remember when Amazon, and going back in the old office, Brent, you remember this, Dennis? Remember when Amazon was punished for spending all that money? Remember? They were making a bunch of money.
25 years ago.
What year was it? Yeah, what year was this?
Oh, come on.
2015, 2014?
1999.
In the old office, Dennis.
Yeah, well, the old office, we were in there. You left the old office in 2003.
No, not bright. Oh. I'm talking the Benzinga office.
Oh, in the Benzinga office.
Yeah,
okay.
remember Amazon?
I remember. Okay, I remember. Yes.
And they would come out and they would like, oh, we made all this money, but we're spending it. We're spending it. We're spending.
Yeah, well, that's what Amazon did. Amazon did it for years. Just grow the top line. Don't worry about the bottom line. For years.
Yeah. So maybe is this just a reboot of that?
No, well, that's what we saw last year. That's a recap of what we saw last year is like spending on AI. You're saying you're going to do something with AI and the stocks just rip higher. We saw that. This is the reality check that a lot of this excessive spend, they're worrying now that there may not be a reward at the end of it. So they don't like the excessive spend all of a sudden. That's what's happened here. We're into reality check time here. So, and that's what this sell-off has been about. It's been about everybody very much heavily invested in AI. And now all of a sudden, like trading, and stocks trading with ridiculous multiples. I saw a statistic yesterday. IGV, after selling off, and IGV is all your software names, after selling off 30% in the last month, is still trading, those stocks that are in here are still trading with a higher multiple than the S&P. They were trading to like 23 times, and the S&P is like a 21 or something. Is that not insane? After a 30% fall, these stocks are still overvalued relative to the S&P. That's how much bubblicious territory we were in. I mean, go to Palantir, the retail stock of the retail stocks. This stock's $200, trading 100 times sales or whatever the hell it was. It was ridiculous. So, I mean, this was bubbles popping, like bubbles that deserve to pop. Silver going from 30 to 110. It hasn't done that in 20 years. It does it in 2 months. What do you do when your stock or your silver, which goes up 10%, here and there after, 2 years, now goes up 200% in a year? What do? You sell it. That's what you do. Now, you didn't sell already. Now it's come all the way back down. So are these stocks coming back? Are we all just going to reinflate this bubble again? I don't think so. I don't think we can, which brings us to Louis Sykes, because it's a good conversation, because Bitcoin started all of this. We talked about Bitcoin. Bitcoin was the catalyst. Back in October, started selling off. Crypto started selling off. And now it's went into all the other momentum names here. Let's run that intro, bring in Louis, because I want to get his discussion here.
Louis,
morning, guys.
How you
are
doing?
Hated this morning, Dennis. Just listening to you guys talking about software and bubbles. You're energized.
People don't want to hear that, there was bubbles to burst, but that's really what we had happen. Like this excessive speculation bubble has officially burst. So, and you were talking about it with crypto. I mean, you think about like your call with MSTR, Louis, which was spot on. You're talking when this was trading 2 times NAV, or even more than that at one point in time. You're like, eventually this is going to trade back down to NAV. It has done that. and even maybe more in some cases. It's down in $100 last night here. But not just sticking with MSTR, but just sticking with crypto in general here in Bitcoin. I mean, this has been a pretty violent 2-week sell-off here. We took out that 86,000 level that we had been talking about as technical support, and bang, we could fall down to like 60,000 last night. I mean, $26,000 we fall in Bitcoin in 6 trading sessions. That's a pretty violent sell-off here. Do you think that was capitulatory selling we saw last night, where now maybe everybody who needed to get out is out, or is it just so many people in here right now? Is there more pain ahead? Let's start with Bitcoin. What are your thoughts here on this recent sell-off?
I bought some more this week. I haven't really been buying at all these last few months because the trend has been lower. These things, what we're seeing is we're seeing the same sort of thing that you've been talking about just briefly before I joined. We're seeing a whole bunch of excess getting rinsed out of the crypto market. I think we're getting close to that. I think Bitcoin is back to its prior cycle highs. We're back to those 2021 highs. We're back to our realized price in Bitcoin, which in other words, if you have a look at all of this on-chain data that we have, all of these Bitcoin that are just moving around the market, we can understand what their cost basis is on-chain because all this data is really transparent. That cost basis lies at about 55,000. In previous bear markets, that realized price and a little bit below has often been the area where longer term bottoms have been put in. So we could see some more weakness in these next few weeks and months. But I think longer term, for me, I think this is a really good area to begin averaging back into this market if you are a longer term investor in this space.
Do you look at capitulatory selling ever in your technicals? Because it felt like it last night. Like, I've been in the market 27 years. I went through the tech bubble burst. I went through the financial crisis. I said it last night in our chat around 7 o'clock. I was like, this is starting to feel capitulatory and stuff like SLV and Bitcoin. Because silver, just went from $110 to $60 in 5 trading sessions. I mean, and it felt last night like it almost felt margin calling selling. Like, I watched silver go, I know you're not a silver guy, but it was moving with Bitcoin. It was 67, 66, 65, 64, 63 in a straight line down last night. I was like, this is liquidation happening. Somebody's just getting liquidated here right now. And Bitcoin was just following with it. Like, Bitcoin was the same thing, just dropping 65, 64, 63. I don't know where we ended up at the lows. I think it was around 60 or 61. But, and then, you could see, at 7:30, you're like, the selling has abated. And it's like, now we're just left. And then buyers started emerging and buyers started coming in. And now we come in and silver and Bitcoin recovered all of those losses from last night and are trading higher here. It just felt capitulatory. So my question to you is, how often do you look at stuff like this is just too much too fast?
I look at that a lot. You talk a lot about liquidations. I love this liquidation data because, the way that I was taught, Dennis, is that, in life, when there's somebody down and they're on the ground, you want to help them up. But in the markets, when someone is down, you want to kick them because that's the best time and the easiest time to kick them while they're down and to profit off their stupidity and make money off their losses. And we see that all the time in crypto. These reckless traders just going out here in the perpetual futures market and just buying all of these really speculative, high volatility assets on leverage, and then they get liquidated. And when you see that big spike in liquidations, that can provide some relief, that can provide the conditions necessary to build a little bit of a bottom. I just do want to say, just providing a little bit of perspective, the big capitulation in crypto actually came back in October of last year. And so if you think about that, Bitcoin was trading near its all-time highs in October, but that is when the capitulation really took place because you already started to see the excess massively get drained out of the crypto ecosystem. The market is finally cottoned on to the fact that we don't need all of these worthless cryptocurrencies. We don't need 100 different blockchains that basically do the same thing. We don't need all of these random cryptocurrencies that grant you no intellectual property or legal right or ownership to the technology. We don't need this. So the market has actually been rinsing out this excess now for a long time. And I think longer term, that's actually really optimistic because you think about the 2022 bear market, right? That was a bear market that was marked by a lot of fraudulent players getting out of the market. You had BlockFi, you had FTX, which was the prominent one. But then in the recovery, in the few years after that, there was a void there because that void was created by all of these fraudulent players getting blown up. But then you had Coinbase, BlackRock, these financial institutions, the entire US government, US government finally introducing some good regulatory frameworks to fill in the void that was created in that 2022 bear market. And so that same question right now of where that void is being created in crypto right now, it's in all of these worthless cryptocurrencies, right? There's no appetite for this speculative junk, but surprisingly, there have actually been a handful of cryptocurrencies that have actually held up really well. These are cryptocurrencies that are generating revenues, that are doing genuinely amazing work, and then they have mechanisms to capture that value in the form of their cryptocurrencies, and they've actually done really well. So while the entire market is selling off, you've got a handful of names that look really great in,
How does a
in the face of the
cryptocurrency
selling.
generate revenue?
Yeah, so when people use these networks, right, you need to pay a fee to use these networks. In the same way that if you tap your credit card at the machine, at the FPOS machine on the supermarket, and you pay that 1 or 2% fee, that same principle applies to cryptocurrencies and all these crypto networks.
And give me a couple examples of currencies that are at that stage of development.
I mean, I've been over here just waffling this entire time. Let's talk about some charts. I always bring some charts.
Bring them up. Bring them up. Bring them up. We're now let
slides
Louis.
and
Louis, you want to bring up
PDFs.
share your screen? He's going to share it.
He's going to.
I'll do that right now. All right.
He's fired up.
Let's go. This is what I'm talking about. Bitcoin at its price cycle highs. Everybody is puking. This thing has just absolutely gone vertical to the downside. I just bought a little bit of Bitcoin this week for the first time in a while. I think the risk versus reward here is really well defined. This thing could absolutely go low in the short term. I don't really care. I think that the risk generally is asymmetric in your favor if you're a longer term Bitcoin investor here.
I mean, you've got a key level. You've outlined a key level. We had those double tops, 2021, 2022, 2024 consolidation breakout. We say old resistance can become new support. So technically speaking, you'd think this 60,000 level is probably pretty big.
Mm-hmm. Absolutely. And, look, if anything, this might surprise you. If anything, I'm probably more of a perma bear on crypto than a perma bull, right? Like I think that most of these things are going to zero. You have a look at a lot of these charts, they look terrible. You look at Solana, who in the world wants to own this piece of garbage breaking down below all the support? You can tell all these stories and fancy stories about all these blockchain networks. I don't care. Look at the chart. This thing looks disgusting.
Yeah.
Why would you want to own this thing?
Yeah, I mean, sometimes it's just as simple as looking at this, and it gives you real perspective. The ridiculous run up from 2003 to 2023 to 2025. I mean, 2 years ago, from what, $16 to $300. I mean, things just don't go straight up 2,000% without some type of check back here. I love that what you've done here with all the tops and the break of this critical support level here. So yeah, you're catching the falling knife right here.
Absolutely. And then
what about
Ethereum?
Keep going.
Crypto market cap. I'm on fire here, Dennis. The volatility just got me juiced here. This is the crypto market cap excluding the top 10 largest cryptocurrencies. When you look at this line, think of this as like the small and mid caps and the micro caps of the crypto market. We have excluded the large caps and the mega caps. This is what the small caps of the crypto market looks like. Again, this looks terrible. And I think we are undergoing this massive repricing where, again, investors have cottoned on to the fact that we don't need all of these crypto assets that are worthless. We don't need 100 different blockchains. We maybe need a handful of blockchains that maybe specialize in different things. We don't need 100 of them. And so you're seeing this big repricing, and I think that's going to continue. And I think the ultimate opportunity that is being created right now is these new networks, these new applications, these new technologies that are actually getting adoption, that are actually generating revenues, and they have a mechanism to capture that value in the form of their tokens. Because a lot of these tokens, a lot of these cryptocurrencies, even if people did use them, which nobody does, but even if people did use them, they would have no mechanism to capture any of that value. They just piss it away into the wind, and their cryptocurrencies just still keep going down. And so I think this breakdown continues to hold.
What are the top 10? Like, you got excluding the top 10. What are your top 10? I don't know if we've ever said this. Obviously, Bitcoin, Ethereum. What are the top 10? Like, in Louis Sykes' opinion, are the top 10 all investable, or is it only the top 5? Like, what's your favorite, like non-Bitcoin, non-Ethereum there? Talk about this.
Well, the top 10 in that chart specifically is just the top 10 market cap, which is
Okay.
hilarious because, you could probably, I think Dogecoin is even in the top 10. So you talk about just
No!
speculative
Is
excess.
it? Come
So,
on.
Dogecoin and Ripple, these are things that are just absolute junk and they're in the top 10. So again, there is just so much room to go for a lot of this worthless crap just to get priced out of the market.
Wow.
Here's an example of one that's shown a lot of relative strength. Talking about stuff that actually works, that is actually generating revenue. Let's pull up the chart.
Yep.
Crypto is getting slaughtered and this thing is trading at all-time highs. Dennis, tell me that is not a signal that you...
It is. And actually, I forget who it was in the S10 room last night, but they were giving you props because they had bought some of this, how do you say, Canton?
Mm-hmm.
Yeah. And anyways, it was giving you props because they're like, crypto is getting slaughtered. And apparently, when you were on our show, you were talking about this and it was around 13 cents. And you said you loved it. It's up 17 cents. He's like, I'm up 4 cents on this, or like 20% on this thing. And everything else is slaughtered. I'm like, get that Louis Sykes back guy on because he knows what he's talking about.
Well, look, Dennis, let me tell you, this thing is literally generating more revenue than Ethereum and Solana combined. And these guys, I kid you not, they're moving $8 trillion on behalf of financial institutions every single month. I just talked to the founder. I just had a great conversation with the founder this week. And these guys are doing some fantastic work. They have, signed a whole bunch of real financial institutions on. These guys are going to win the tokenization race. It's not going to be Ethereum. It's not going to be Solana because these networks aren't compliant for tokenization because they're public chains, right? If you're a bank and you're trading bonds, you can't have your bond portfolio and all your assets and all your transactions being advertised to the world where everybody can see and front run you. You don't want that. You need some sort of privacy. And this is the network that has literally been built over the last 10 years for this reason, to be compliant. And so, I'm talking my book here, but, I think just paying attention to relative strength, and you can say, Louis, I don't really believe in your stories. I think they're nonsense. Okay, all right. But just look at the relative strength. You could think that I'm just talking out of my ass, but just look at the chart, look at the relative strength. It is off the charts.
Louis,
Unbelievable. Go.
Yeah, Louis, before we let you go, I want to talk a little bit like market structure for a second, right? And I'm looking at the monthly Bitcoin chart, and there's still a lot of people sitting on a lot of profits from a long, long time ago, right? And who knows? Maybe they wanted to sell 100,000, but when it went to 125, they believe everyone it was going to 150, right? So there's a lot of overhead supply. You have just created more overhead supply. This thing has been cut in half. I like your thesis. I like where the support is. It makes sense in a couple different time frames. But do you have targets? Do you have objectives? Or is this something like you're buying this 60K and you're probably not married or don't have kids yet? You're passing this on? Or is this a trade? Because you said that overall you're bearish most of the currencies here. Is this a trade? Do you have a target? Because to me, I just think you just have so much overhead supply by here, and you're not going to have the same hype that you did last time. Where's your upside targets for this move?
I've got a chart for that. I want to pull back the chart.
Bring him up.
He's
got
coming
a
at
chart for everything. I love this.
This is what I'm talking about. You're saying that everybody is sitting on a lot of profits. So what we're looking at here is the price of Bitcoin. This is this colorful, beautiful line that we're looking at. But this orange line is what we call the realized price. This is basically the average cost basis of every single Bitcoin that ever exists in the entire world. This is almost like an anchored VWAP to inception, but for every single Bitcoin that exists, right? We have the data, we've got the transparency. And so right now, we're not sitting on a whole substantial amount of profits. In fact, we're sitting on, the average Bitcoin is sitting on about a 10% gain, even though we're still trading in $60,000 territory. And so when investors are losing money, which if we get back below, say, 55,000, that's going to be the case. That has proven to be an excellent opportunity if you're a longer term Bitcoin bull. If you think and you believe in this technology, that is the area where you want to be buying and dollar cost averaging. For me personally, look, I'm young. I want to take on some risk. This is not a trade. I think this probably goes lower. But I think longer term, looking out 2, 3, 4 years, I think I'm going to be patting myself on the back for wanting to buy some Bitcoin here at $60,000.
Bitcoin, Canton Network. That's what you're buying.
Absolutely.
There we go.
All right, Louis Sykes, homie charts coming at us. I like it. I like when our guests are feisty and come with their charts
great.
and their opinion. And just to let you know, Louis, I will never draw a chart that colorful again. So just that's it. That was absolutely beautiful. Okay, Louis, you're such a special guest on the show. Thank you very much. We'll be dialing you up in a couple weeks.
Thanks, guys. Have a good weekend.
Thanks, Louis.
And I'm popping in to say thanks to our wonderful sponsor, Hive Digital Technologies. Hive Digital Technologies. Oh, my sponsor thing disappeared. Here we go. The show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is one of the fastest growing Bitcoin miners, on track to grow even more this year. Scan the QR code on the screen in the lower right hand corner to get over to hivedigitaltechnologies.com, where you can learn more about Hive. Thanks again to Hive for sponsoring Pre-Market Prep.
Okay. All
Taking
right.
us back here. Yeah. So we know there's been a significant sell-off in Bitcoin. We know there's been a significant sell-off in silver. We know there's been a significant sell-off in all these speculative names like Palantir, Oklo, the nuclear names, all where these speculative bubbles were. This money, amazingly, has not come out of the stock market, though. This money, this fear, usually when you see stocks going down 20, 30, 40%, they start selling everything. Not in this market. They're like, nope, we're buying low PE names. And the money has been coming and going into low PE names for 3 months now. It started in October. We're now entering February. So we're entering the 4th month of this year now, where low PE names have really benefited. I mean, we can look at Burke. Burke's probably not even the best indicator because I had the hangover after Warren Buffett officially left. But I mean, so many other names is moving up. Bristol Myers was trading 6 times earnings at $42. It's now 59. Merck trading 10 times earnings 3 months ago. Now it's moved up, went from 80 to 120. I mean, you just start going through these charts again and again, and keep following me along here, Joel. Merck, Bristol Myers.
Yep.
We'll move the charts along with us here because it's not just a story of, drug names. Then you can go into staples. Staples relentlessly bid. XLP, Coca-Cola, new all-time highs every single day, it seems like. They're Pepsi exploding higher. Everybody's got their own Pepsi here now. Just running into value. We need value. And these aren't even value now. Like you can get into Walmart. Now it's the staples and people are just coming in. I need defense. And they've taken Walmart up to a 41 PE. I mean, this is where it was when it burst back in the year 2000 and had 15 years where it went nowhere. Now, I'm not saying that's going to happen. What I'm saying, though, is we have been through pockets of speculative bubbles bursting. The speculative bubble burst in Bitcoin. The speculative bubble burst in silver. The speculative bubble burst in a lot of other names, too. We are now creating a speculative bubble in value names. So if we're going to go through rolling crashes here, and that's what we've kind of done, there's a lot of stocks in the value. Like if you're coming in and saying, I absolutely got to sell all these speculative nosebleed PE names now. I got to sell every name in the IGV now. And you're putting it into staples at this point in time, you are so late to the party, man. So late to the party. And I think what's going to happen and could potentially happen is you're going to start to see a bounce in some of these names. We saw a bit last night. Some of these speculative names, don't just go straight to zero. Could they continue to go down? Yes. When that happens, value is probably going to go over. So I actually think some of these value names are in a lose-lose scenario. Hear me out here. Lose-lose scenario. And again, somebody tweeted this last night too, which is an excellent point, but I've been thinking this as well. Because if we continue to roll over, if we actually continue to roll over in all these software names and all these tech names, eventually the margin calls will come, and eventually they'll just start selling everything. So that will roll value over. If we bounce on all these tech names, the money will roll over in the names that we've been hiding into the value. So I actually think at this point in time, a lot of these value names are sells. Some of the stuff that just went relentlessly higher for no reason at all other than rotation is like Pepsi moving up. And it's not even value at this point in time. I mean, we can go look at Pepsi. It's trading with a higher P than most of the software names, which have AI. There's no AI in Pepsi. I can see there's a P, there's an E, there's another P, but there's no AI in Pepsi. If we just go and look at the multiple on Pepsi, Pepsi is now traded up to a multiple of, wait for it, 27 times earnings. Now on a forward basis, it's sitting around 21, which isn't as bad. But, Coke, same story. I mean, Staples always trade with pretty higher multiples. Coke's 26 times earnings. Well, IGV is 23. So you've now taken all these AI software names and saying all these companies are screwed and we better just buy Pepsi and Coke. This doesn't make sense either. So I think where this money has rotated to is going to be wrong again. So if I was long Pepsi at 167 this morning, I would sell it. It was $135 in the start of the year. These are huge moves for stocks that don't move
Look
like
at Coke.
this. Coke's been on fire. I mean, like so many names here. Colgate. I'm short Colgate, full disclosure. I intend to cover it. It's overnight. But when all these things were going up last night, like Colgate was up another $1. Johnson & Johnson at one point in time last night, Joel, on the overnight session, Johnson & Johnson was up $6.
I'd have to see that print.
What is going? Well, I could tell you because I was shorting it up 4. I didn't get the 6. Somebody got it up 6. I was like, what? So I'm still short Johnson & Johnson. I'm still short Colgate here. I tend to cover them today, so these are short-term trades, full disclosure. But I mean, just when they go up $4, it's giving it all back. So I was like, well, do I cover it flat? I can just make the 4 points. I'm like, well, I kind of think the market's going up. We rebound. I feel like these things should roll over and actually sell off. So I think today, actually, well, these value stocks that are trading higher here, or maybe, more shorting opportunities. We'll talk about that in the room here. But I don't think anybody had this on their radar that was going to come in and say this. But I've been tooting the horn for value stocks for 3 months. At this point in time, it's ring the register time. It's like, hey, we were right to be, out of a lot of these other names. And again, long-term portfolio, I still get dinged. I've got AMD. I have a lot of stuff. Don't kid yourself. My long-term investment retirement account that has a lot of AI names in has been beat up. My trading account is at all-time highs right now. Very much like just made money again last night. I'm at all-time highs on my trading account. And that's because I'm playing the rotations. The rotation right now rotated back into these other names. So I'm going to say stocks like Johnson & Johnson, stocks like Gilead, stocks that have just been relentlessly bid here, regardless of their own fundamentals, are overbought here now. There's bubbles in value names. That's where I'm at.
Wow. I mean, these daily moves, I'm looking at this Gilead here. I mean, this is a year move. I mean, that you've had.
How can you not take profits into this? You don't move like this. And it's not like Gilead came out, Joel, to tie on to this. Like, that's a great point. It's not like Gilead came out with great company fundamentals and information. It's just pure rotation, benefiting from rotation, benefiting from the sell-off and everything else. This, my friends, is another bubble. The value stocks have their own. It's not like a bubble that's going to crash and burn down 50%. But these stocks have run 15, 20. Could they give back 10 if the market stabilizes? I think they could.
Turns are fun. Turns are fun to call here.
And maybe
Difficult.
we just sell off. Maybe Bitcoin just crashes again and silver crashes again. And they run back into these names. But understanding the rotation, understanding what moves, is so valuable because you can look at charts and charts are fantastic. But what really makes the chart is rotation. It's institutional money managers coming in and saying, look, I want to be in this sector. I want to be here. All last year, they had to be in AI. Now they got to be out of AI. They're all going to get it wrong again here. I mean, we got stocks getting downgraded, 3 downgrades for Amazon here today. I mean, these are Johnny come latelys, which is going to bring us to the ratings here in a few minutes here. But this is just what, everyone does. Everyone chases. And this is what I do not do as a trader. This is why I've been very successful trading career, is because I pick spots, I pick my spots, and I never chase. And I've got, some heat for that, because on silver, when I was like, it was 70, I was like, I'm not chasing it here. It just came from 50. Well, it went to 110. So, I mean, I would have made money if I was chasing. Chasing was being rewarded in 2025. In normal markets, though, it's not rewarded. We are back to normal markets right now. And if you're chasing, even the rip this morning, like we just rallied, 10% on silver from the lows. Well, that's a rip. So now you got to wait for a dip. Buy dips, sell rips. That's the eternal strategy.
All right. We never did take a look at the Amazon chart here. And you got to dip. So the golden rule, I never told you guys the golden rule of technical analysis. Okay. And it's sell the top of the page, right? And you buy the bottom of the page. Okay. Well, this is 210. This got to 196.80. 196.80 in the pre-market, and you've gotten a little bit of a bounce here at the 205 area. I think the pre-market low is going to be a great area. And the reason I say that, and like I'm looking at Google now and I'm digesting. I know we were making fun of Google yesterday with
Sure.
Throwing the good money after bad. But it had some violent pre-market action, right? It came down. It actually took out the pre-market low, but now it's $20 above it. So I think, to me, overall, that was a dip and a big green candle for the day. I think that's
Goog
the
had
potential.
a great day.
Yeah, I think it was a
That
great
was
day.
Great day.
I do too. I do.
And I think there's certain stocks that are getting thrown out here too. Like we're just in the sell everything, like sell anything to do with tech, sell anything to do with AI. Like it literally, I mean it when I say the market hates AI right now. It does. But is it going to continue? So we went through the innings, and the inning analysis is first inning was AI is awesome. I love AI. Buy all the AI stocks, all the AI stocks. That was the first inning. We're in the second inning of AI here right now. And that's the fear. There's fear with AI. It's like, where is this going? This is such powerful technology. Or is it going to cost jobs? Is it going to displace workers? Is it going to put software companies out of business? Or Expedia and TripAdvisor and all of them just gone? Are the gaming makers all gone? What does this mean? So AI question mark in the second inning. Where the third inning goes, who knows? But I tend to think there's going to be a rebound in some of these AI names. I tend to think that there is going to be some actual winners. I think NVIDIA is a winner. I think AMD is a winner. I think Google is a winner. I think those three stocks are maybe your biggest winners that are kind of not no-brainers, but probably winners. Probably Microns and the SanDisks will need memory, but we need to pull back on those to enter at this point in time. But there's some names that have question marks around them. ServiceNow, I don't know. Salesforce has been in the gutter for a long time. I don't know. There could be, this could be an opportunity for those software names because the IGV's come down to a PE we haven't seen in like 15 years. So it's come down to value area. Could Microsoft be a buy? If I'm betting on anybody, I would bet Microsoft can figure it out. Here's Microsoft just going down every day. I would bet a stock like Microsoft could figure it out. So if you want to take a flyer here, I think you're going to be right on Microsoft, but I don't know for certain. But I'm more comfortable in the stocks that I'm more like, I feel like an NVIDIA, an AMD, and a Google. I feel like those are like stocks that seem to be like going to win no matter what businesses are displaced because they're hardware. And Google obviously has been the one that's been displacing some of the stuff with its Gemini work. So lots of things to think about. But I think at this point in time, there is opportunity out there for some names.
Yeah. Oracle. I don't think I've ever taken a position in my long-term portfolio, a small position, and gotten slaughtered more on it.
It slaughtered me too.
Yeah.
Because it changed. They went from loving AI spend to hating AI spend. And this stock is ground zero for that. This stock, they felt spending too much money that they actually got to take on a significant amount of debt. And they're like, man, if it doesn't have a payday at the end of it, this is like all of a sudden jeopardizing their other businesses.
But then you see Amazon and Google coming in and spending all this money on AI too. I am.
But Google is the one that's displacing a lot of these other businesses here too. Like they're coming in and top of it. Again, nobody knows where we're going. And inning 3 is a big question mark. I think we're going to get some rebounds and some names. You don't want to hear about inning 9, folks. You do not want to hear about inning 9 because just go watch the Terminator movie, and I'm fully convinced that inning 9 is the Terminator. So, but we're a long ways away from inning 9, so we can't put the G back in the bottle, so we might as well enjoy the ride. Inning 1 was a lot of fun. Everybody made a lot of money in AI stocks. Inning 2 has been ugly. Everybody's losing a lot of money in AI stocks. Inning 3, I think, is going to be a rebound. Nothing goes straight down. Then we got to figure out, winners and losers of AI. That's inning 3, and that's where we're entering. Inning 9, don't talk about inning 9. Okay, so let's take the end of the world scenarios off the table here now and talk some other stories here because there's a lot of other earnings that reported here last night. And a lot of these are rebounding here too. Brentster was covering them very well. It was ugly last night. I want to start with Bloom Energy because this one was so interesting. And bring up the charts here too while we cover it here, Joel, because the moves here were incredible. This just shows you the dazed and confused market. Brentster, if you have the BE earnings, you can give them to us now.
I do. The quarter was solid. The guidance, in my opinion, was really good. They reported Q4 earnings 45-cent, a beat versus a 30-cent estimate. Sales really strong, over 777 million. Analysts were around 650 million. The 2026 guidance, they're expecting earnings 133 to 148. Analysts are all the way down closer to $1. The sales guidance, 3.1 billion to 3.3 billion for the year. Analysts are around 2.5 billion. This was one of the stronger pieces of guidance that we saw from companies last night, if you ask me.
It was an awesome report, and the stock popped substantially because it was an awesome report. But remember, last night, maybe not this morning, but last night we were in sell the rip market. This is how we approached in the S10 room last night. I was like, they're just not holding any rallies. So any rally is likely to be sold. And we were saying this across the board on all names. Sorry, we were just saying it across the board. And it was that simplistic. Sell the rip was just working like crazy last night. BE, fantastic report. The stock rallies 25 points, gives it all back. Went all the way back down. But then things changed overnight. And now it's come all the way back up. So, I mean, that's just what we were in last night. It was just sell the rip camp across the board. Didn't matter how good your earnings were. Reddit was up 20 points, then gave it all back. And then it started to rally here. Now we've rallied overnight again. But we've just seen this again and again where Affirm was up like $6 or something last night on its report. We're just covering them all really quickly because we're going to run out of time. And then turns around and sells off and gives it all back too. This is the story of the market from last night. And still maybe today, we're in the sell the rip camp. And we definitely have a rip here to sell. I would think, I like the selling the rip on the value stocks. I've said that already today. Maybe it's a sell the rip camp on the S&P too, because this is now 110 points from last night's low. So, I mean, it's been the play to sell rips. Why does it change here now?
Yeah, this is I just want to go to this Bloom Energy real quick. I mean, what a great area to be in if you've been on this ride. Hit the all-time high, 176, and then you came down to the 133. Snap back right here. Half of the moves, bulls and bears have to decide. Is this just a dead cat bounce here? Like, I shouldn't have been buying up here, and boy, I wish I would have bought here. This 155 area, we've traded it over in the pre-market just recently. I'm not going to look at that over 160 print. But you got, this is the candle of hurt right here. This candle right here hurt a lot of people. Yep. And there you are. 155. Mark that down. 155. It's pretty bad writing there, but 155. Boom. That's your level. You get above there, you hold there. Hallelujah. We're going 170, 175, 200. I just got to be
not in
thinking,
this market though. For buying
I just got to think that this is, just watch this area over the next couple of days because we saw what happened. I'll just give you an example with the SLV. And I kept on saying, we're buying the bounce. We got the double bottom here at 69. This is it. This is 70. We're going right back. Didn't even sniff the 50% retracement before it got smoked again. And now you have to figure a whole nother. So every move has a counter move. And it's counter move after a big decline going into strength. You got to be careful.
And then go on the opposite end, and just to cap it all off with a capitulatory conversation last night, IREN reports, and you were right, Brentster. This was a disaster of a report, was it not?
One sec, Dennis. I can't. Can you do it, Dennis, please?
Yeah. So go
I'm
IREN. We
backstage.
don't need the numbers. We'll just say it was a disaster of a report. Brentster like, this report's bad. The guidance isn't good. There's just nothing good here. Bring up the chart on IREN, Joel, because you will not believe what this did last night. This stock just got absolutely hammered, and you can see it on the charts if you look there last night. I believe we went under $30, so we went from 40 to like 29 bucks, and it's come all the way back. So this is like where we are. We are selling rips and buying dips as of last night. They started buying dips. They started buying them hard, but the stock loses 10 bucks. I mean, this is one of those darling retail names, and it was capitulatory selling last night too. It felt like capitulatory selling in this name. What does that mean? It means everybody can't take it anymore. So maybe some margin calls are happening for people. I'm losing so much money. Just get me out. I just need to be out, and I'll never buy a stock again. That's what capitulatory selling is. That's when the stocks bottom. I think the IREN, 29 bucks, hindsight capital's 2020, but I feel like this is, again, another example of how ugly it got last night and how much we've rebounded here since that ugliness. I feel like we hit downside capitulation on a lot of names last night.
All right. It is 8:52. I hope you all been enjoying our new segment by the fly and the tip ranks. Let's go to that right now. Good morning, Julie Gillespie, running things over at TipRanks. How you doing this morning?
I'm doing good. Excited that it's Friday.
Certainly a lot of price action in the movements, but in the markets. But first, let's tell us what's going on over at TipRanks and the fly. Give us an update.
Yeah, a lot of exciting things on TipRanks. We're moving forward with a lot of exciting new tools and everything. In the past year, we launched our AI Analyst. So basically taking all the data that these Wall Street analysts look at and creating a comprehensive stock report, really easy to see all these factors in one place. It even comes out with its own rating and score. So we're basically seeing how AI can compare to actual Wall Street analysts. And then on the fly, we just launched our new pro site. I know you guys have been talking about it there. We have KPIs, a lot of unique insights and charting, plus, of course, the latest breaking stock news with over 1,000 news articles published daily. So a lot of timely, great information there.
All right. So we got to run that great intro for you on this one. All right, it's great. It's a really an interesting day, right? Because you have so much volatility in the markets. You've had a lot of earnings, but the analysts are still out there, and we try and rate the ratings. And one thing that we really don't like to see is when a company comes out with like not a great report, and the stock goes down, and then they tell us to sell. I mean, I think those are, we call them kind of like after the fact ratings. So on your radar, look at what you see out there. Amazon today, trading in the red here, just got crushed, coming from 245 not too long ago, got under 200. Talk about the ratings.
Yeah, it's kind of funny on this one. In the last 2 days, I mean, there's almost 40 analyst ratings on the Amazon stock, and all but 2 of them still have a buy rating on it. But we did see an actual downgrade this morning come from D.A. Davidson. They noted some potential competition from Microsoft and Google and said that Amazon's AWS could lose their lead and kind of scramble to catch up through some escalating investment. I think like somebody had to downgrade the stock though, right? Like we're seeing these sky high valuations in these big tech companies and everything. Analysts are still saying buy. They're largely lowering their price targets, some by $15, some as much as $50 and everything, but maintaining their buy ratings. So I was actually somewhat pleasantly surprised to see someone downgrade it to a hold this morning and maybe take a little bit more cautious stance for this near term as we see some of this rotation out of these sky high valued big tech names.
I mean, this is where we are here, and analysts, 42 buys, like you're saying, and the majority of analysts are buy. Let's just stop and have this conversation here, because why is it that analysts are so scared to put a sell rating on stock? Because you just rarely see it. So let's just have this quick conversation here. We got some time here. We can go over time with Julie. Why is it that analysts on the street are so scared to put sell ratings on stocks?
I mean, I think for them to go all the way from a buy to a sell rating, they're really saying that they don't see any more growth potential here and it's time to get out. So I think to see them go fully from a buy to a sell, there has to be a drastic change in the story. So I think in the long term, they're saying obviously Amazon's still going to grow over the years, but we might see a bit of a slowdown in this near term and everything, but they're still believing in that long-term picture. So it's much more common that they'll maybe move to a hold. And when we see a hold rating, I basically consider it, if you don't own it, maybe don't buy it right now. But if you do own it, don't quite sell yet, just kind of hang on to it. So I think that's why they kind of straddle more that neutral, or like just lower their price targets, but still in the long term are feeling optimistic on the stock.
Julie, a number of other ratings that are interesting here this morning. And I just want to go to them in the fly as well. We've got Roku catching an upgrade from Oppenheimer here. They're bringing it up to outperform. I like the ratings better. Like when we're rating these ratings, and we've been doing this segment here for about a month here now, I love the contrarian calls. Like when a stock's going down and you tell me, not necessarily that's going to be a good call, but I like the guts. I like an analyst having guts. Like when I feel like you get a downgrade after the fact, Jack, I feel like, well, why didn't you tell me that before the stock fell 20 points? When you get Roku coming in here, and this stock has just went straight down 20 points, Oppenheimer analyst this morning here has some guts. And if we go to the actual fly, which you can see on your screen here right now, I'll just read from you. Oppenheimer analyst Jason Helfstein upgraded Roku to outperform from perform with a $105 price target. I mean, they're trying to come in here and buy the dip. I don't mind that. What are your thoughts here, with analysts and obviously, contrarian calls?
Yeah, no, I definitely agree. And these are the ones that maybe are more worthwhile paying attention to, because they are showing you more of an opportunity rather than a stock that's just been doing fantastic. And they're like, oh, keep buying. And you're like, well, that's not necessarily unique insight there. Whereas these, when you see them upgrade them when the stock has been at a low, you're like, okay, we're actually identifying possibly a low on the stock here where we're going to have some upside potential. So these are the ones I think are great to actually pay a bit of attention to and take a deeper dive into the stock and see if you agree with that bottom, because who doesn't want to buy a stock when it's down, right? That's what we're looking for. So these actually provide a little more insight and opportunity, I'd say.
All right, talking about buying the dip here at Citigroup, upgrading Estee Lauder to a buy. Big haircut yesterday. Buying the dip in Estee Lauder. How do you rate that rating?
I got to pull that one up here. I was trying to look at all the ratings this morning and everything. And I know they just reported earnings recently, I believe.
Yesterday, and the report was not that bad, but they took it out to the woodshed, ended up climbing back and trading up a little bit today, Estee Lauder.
Yeah, and this is an interesting one too, when you see they're upgrading it from a hold to a buy, and we have a lot of other analysts lowering their price targets and everything as well. Many still just maintaining their current ratings and everything. So again, it's another one where they're coming in with a little bit of a different outlook than some of the rest of the street and everything. So I think worth taking a deeper dive, but also understanding why these other analysts are lowering their price targets so much. I mean, this one from Citi is a little on the higher end at 120, where we see the other analysts lowering close to around 100, some of them a bit under. So it'd be interesting to read some of the commentary on the reasons for the upgrade, but then also the reason for some of the lowered price targets as well.
Before we go, I just wanted to ask you about like the trends in analysts, going, they get going, they get on that herd mentality, right? Like downgrade, upgrade. How's the best way to follow that in TipRanks?
So we have our trending stocks and everything, where you're going to see a compilation of stocks that have been getting a lot of attention from Wall Street analysts. You can look at the most rated, the best rated, or the worst rated and kind of see what way the herd is going. And as much as we hate a herd mentality, it can really indicate some of the market sentiment if you're wanting to see how the overall view of it is going to be. But then we also have our daily analyst rating, where you can just sort from those upgrades and downgrades and maybe narrow in on the ones that aren't with the herd and are actually going a different way. So you can find the stocks that only one analyst has maybe upgraded or downgraded, and maybe find a little more unique opportunity there versus, the ones that have 30 analysts waiting in one day, all going the same direction.
All right. Great information coming from the Fly and TipRanks. Happy to have you a sponsor here in 2026. We really enjoy the segment, and we'll be getting you back on again soon.
Yeah, look forward to that. Thanks, guys.
Thanks, Julie.
Okay. Well, it's 9:01 here on this Friday, February 6th. Should be an interesting one, Triple D.
I mean, the interesting stuff has already happened here, like to a certain extent, where we had this wicked capitulatory selling all night, and then we come in and we've had this wicked buying from 7:30 p.m. last night. So, I mean, we've had so much movement here. Now the question mark is, do we just give it all back, or do we continue to build on it? I think we're going to back and fill a little bit. I'm going to call and say I think that the lows from last night, where do we get to on the S&P? Let's bring it up here one more time, Joel. Where do we get to last night? Because I think there's going to be lots of buyers on that lower area of the S&P last night. Where do we get to?
Dennis, we were 100 points lower last night.
We've had 100-point ranges here a lot. So if we do back and fill a little bit, I don't think it's going to be as easy sledding for the bears here today. That's where I'm at. I think it's been really easy for the bears, almost too easy, blindly selling every rip, just working. I think it gets a little bit trickier going forward.
I think it's going to be extremely tricky, and I have some definite levels that I want to discuss over in the STN room because they are going to determine a lot today, and it's going to be happening early in the session. So let's hop over there and get ready to attack, which I consider today one of the most important days in Wall Street. Got to hold these games.